This program brought to you by Amoco Federal Credit Union.
Credit union, a cooperative financial institution that is owned and controlled by its members and operated for the purpose of promoting thrift, providing credit at reasonable rates, and providing other financial services to its members. Hey folks, how you doing? We've all read the newspaper headlines. And it has been a scary 2009. Everybody has something to worry about. Loss of jobs, loss of money, and a general uneasy feeling all the way around. But it's a new year with new possibilities. My name's Dean, and it's time to get financially fit. So how do we do that? I've got a list of steps here, but I'm not going to bore you with a simple list. I'm going to show you the way. I'm going to take you through the full circle of your financial picture. I'll compare regular banks with credit unions. Then, we'll guide you into figuring out your current financial situation. Then we'll help you get control of your debt and talk about how to make smart spending decisions. And then, we'll work on setting goals on how to save for your future. Come on, let's get started. First, let's talk about financial institutions. I mean, you got to put your money somewhere, right? Unless you're going to put it underneath your mattress or something. And if that's the case, I'm going to need a lot more time with you. So call us after the show. Banks versus credit unions. What's the difference? Here's your average bank. Pretty plain and, well, very corporate. Here's your friendly neighborhood credit union. And look, all the employees are your friends and neighbors. Huh, interesting.
Hey, Jane.
Hey, Bob.
But that's just the surface difference between the two. Let's talk about what really matters to you.
Me?
Yes, you. Listen, my friend, here's the deal. Banks are a business in search of profit. They're usually publicly traded and owned by stockholders.
Trust me.
Credit unions are non-profit owned by its members. This is a big difference, as you will see. Because banks are all about profit, they typically end up having higher interest rates on loans and lower interest rates on investments. Guess what? Credit unions are the exact opposite. They usually have lower interest rates on loans and, you guessed it, higher interest rates on savings.
What does that mean for me?
Dude, it means more money for you. I don't know about you, but I like more money. And as you see as we go along here, I am all about maximizing your profits. You kind of see where we're going here? Well, if you don't get it just yet, you will. Okay, let's continue. Banks are usually quite large nationwide institutions. With such big corporations, the regular customer can end up feeling like they are only a simple number to the place they keep their money.
Calling number one. Number one.
Oh, man.
Credit unions are usually local operations. They are personal and you are a name, not a number. I don't know about you, but I prefer to be called by my name. I like my name. So to be considered a person with a name and not just a number? What a concept.
Hi, Susie.
Hey, John.
Good morning, Amy.
So to put it simply, banks equal corporate business. Credit unions equal family. Okay, let's move on. What do you need to know when it comes to a healthy financial future? Step 1, know your situation. Where are you financially? You need to know your starting point, what you currently have. Once you have your starting point, you can plan for what you need to get to the finish line. To get started, let's figure out where you are now. We're going to figure out our net worth. Simply put, net worth is what you own minus what you owe. What you own are called assets. Here are some examples. Your home and its contents, any savings or investments that are in your name, cash, the gold ring your grandma gave you, or that original Thriller album. You get the picture. These are your assets. These all go in the positive column. Now what you owe, it's a little harder to figure out. This would be any outstanding credit card debt, student loans if you have them, that car loan, and the outstanding balance on a home mortgage. These are your debts, or liabilities. So, we have our liabilities on one side and our assets on the other. we subtract the liabilities from the assets, and we get your, drum roll please, net worth. So what now? Now that you know what you're worth, it's time to establish those goals. Where do you want to be financially? Think about that, and I'll be right back.
I refuse.
Refuse.
Refuse to live in debt.
I refuse to pay.
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 My bill's late.
I refuse.
To live. Paycheck.
To paycheck.
I will take control of my money.
Find out how Amoco Federal Credit Union can help you. The difference between a bank and a credit union is family. Join a family of more than 50,000 today and let us serve your financial needs. Log on or call Amoco Federal Credit Union at 800-231-6053. It's all about you.
Okay, let's break it down a little further. Let's talk about what you need versus what you want. Now, what do you need and what do you want? Allow me to illustrate. Okay, let's start by making a list.
What do I need? A car? A flat screen TV? A new house? Oh, and a new yacht. And a vacation house, too.
Okay, whoa, wait. I gotta stop you right there. I mean, do you really need those things? Or do you have the cash to buy them?
Well, I hadn't really thought about it.
You see, those are things you want, not the things you really need. A want is something that you can do without. It may be nice, it may even be better than what you already have, but you can live without it. A need is something that you really would have a difficult time doing without. Starting to get it? And since we're talking about getting financially fit, let's focus on our needs, okay? Okay?
Okay.
You've got to be realistic about this. One of the first questions you should ask yourself is, can I afford this with my current paycheck? And if you choose to buy, will you still be able to take care of all your other current expenses? Can you actually purchase these things with your paycheck outright?
Well, I guess the yacht is out. I can just repaint my current house and fix it up. I can buy a reliable used car instead of buying a new one. I really wanted that big TV, but that can wait.
Now you got it. Let's keep up the good work. Now we're ready for the next step. You do have to be very specific when it comes to setting your goals. What are they? A comfortable retirement? Travel? The education of grandchildren? A sports car? Write them down. Be realistic. Then make these things part of your plan. Make a list. I know you guys are probably wanting to call me Mr. List, but a list helps make your goals real. And then you can figure out just how much money it's going to take to reach the goals in your life that you envision for yourself and your family. So now that you've got your list of goals, you can create the plan to accumulate the savings to achieve them. Step 2, create a savings and spending plan. Now, how do we do this? Well, first, figure out how much you earn. And remember, be honest. All right, write that down. No, seriously, do you need me to spell it out for you? Okay then, come on, find a pencil. I'll wait. All right, now what are your expenses? Expenses are everything that costs you money. Everything. Now use that pencil you just found and write all those down. Now we all have to eat, so I know you buy groceries. Come up with an accurate estimate for that. Pretty sure you have to pay for a place to live if you're watching me. Write down your mortgage or rent payment. I know you have utility bills as well. Keep going until you list all your expenses. Refer to your monthly reoccurring bills or your checkbook or bank statement. Make sure you list everything. Don't forget your car and health insurance premiums. You see how this works? By writing things down, you get a clear financial picture and not just a guess. I know I hate doing it too, but if you don't do it, you're going to continue to struggle. All right, moving forward, let's do some math. What's your bottom line? Is your income less than what you're spending? Don't panic, it's okay, it happens. Now, where can you cut spending? Okay, let's prioritize that spending. Eliminate those things you can live without, like that morning trip to the coffee shop, I mean, do you really need that jumbo latte? After you've gone through all your expense items and you still find that your income is less than what you're spending, here's what you need to consider. Finding a way to add to your income. I know. Easier said than done, right? But that's why I'm here and you're watching. Come with me and we'll go check in with some of my friends at Amoco and see how people just like you found ways to enhance their financial picture. Come on.
To me, it's all about that personal feel.
The people there are so helpful. They're so willing to talk to you.
They're all like your neighbor, like you've known them for years.
I don't feel like I'm walking into a banking institution.
I would recommend Amoco Federal Credit Union to everybody.
I recommend Amoco, absolutely.
Definitely, I recommend them.
I love them. They help me get out of debt.
Log on or call Amoco Federal Credit Union at 800-231-6053. It's all about you.
Remember, you need to pay yourself first and establish an emergency savings fund. Your emergency fund should be equal to 6 months of your monthly expenses. Don't be upset if you don't have one. You're not alone. If you can possibly avoid it, avoid using credit cards in those emergencies that pop up. And I mean real emergencies, not that fashion emergency when you've got to have those new shoes, or the techno emergency when you see a sale on that new piece of gear you've been wanting. So let's get started. Your goal should be to save at least 10% of your income. 10%. One more time, 10%. When you build your emergency fund, you won't have to use those credit cards. Let's take a closer look at your bigger picture, your financial circle. First, let's separate your budget into percentages. Here's mine made into this cool pie graph. Yeah, and see, there's my 10%, put away for savings. Whew, that's a lot of info. How you doing, you good? Great, because the next step is a hard one. I'm talking about, dun-da-da, deleting your debt. This is where you have to make sacrifices. You may have to give up a little bit or a lot, depending on the extent of your debt. Well, let's hope you don't have to sacrifice too much. Now, how do you delete your debt? Well, to put it simply, you pay it off.
But how?
How, you ask? First thing, get rid of those credit cards. If you can't responsibly handle credit cards, cut them up. Don't just put them away saying you won't use them or that you may need them in case of an emergency. If you feel you must, keep one. Now keep only one. And pick the one with the lowest interest rates and the lowest membership fees. Put it in a safe place. Do not keep it handy. I know people who freeze their emergency credit card so that they have a cooling off period before they can use it. It's easy to be tempted, and you can end up using your card for the smallest of things. Before you know it, everything is an emergency because credit cards make it way too easy to spend money you don't have. All the other cards, cut them up, shred them, burn them, make credit card confetti. Now, you can't use them. Live a cash-only lifestyle. Cash only. Spend only what you have, and that's it. Keep your budget handy and refer to it. It's hard, but it's worth it to gain control of your financial lifestyle. Okay, back to existing credit card debts. Did you know in many cases you can renegotiate your interest rates? Call your credit card company, ask for a lower rate, negotiate. You can get a lower rate if you try, and there are nonprofit organizations that can give you advice. If you have questions, you can always ask your friendly Amoco representative. You can get lower rates. Demand them. Okay, good work. Now take a breath. Good. Now, next step is to increase your payments. By negotiating a lower interest rate, you're already increasing your payments by the fact that more of your monthly payments will go towards reducing the debt instead of interest charges. Awesome! Now let's look for ways to increase your payments even more. Aggressively repay those most expensive debts. The debt will just continue to increase if you don't. And before you know it, those payments are going to be out of reach. Focus on the highest APR credit debts first. Those are the ones charging the most for the money you owe. Whatever you do, get started. The fact that you're not using credit for the day-to-day purchases means you're moving in the right direction. You're doing great. You know your current situation, you've got a budget that lets you know how much you spend, you've defined your needs and your wants, and you've established a set of goals. And you're building your emergency fund. Good work. But there's more. Did you know that there is good debt? Good debt versus bad debt. A good debt is something that you buy that increases in value. That house you bought or that business you started can be good examples. And loans taken out for education are good, because hopefully you'll be making plenty of money to pay off those student loans. Bad debt. These are any debts that decrease in value. Unfortunately, these are things we can spend a lot on, like vacations, new cars, stuff like that. You know that stuff you're putting on your credit card and calling it an emergency? Yeah, that stuff. This is the important part, so I'll repeat it. Pay off that debt. Find a way. I know you can do it. Use that budget to find ways to cut down on your debt. Don't think you can? I know you can. Here's a few ex-credit card owners for a little inspiration.
I got lots of credit card offers through the mail, and after I was approved, I just spent like I was rich.
Our debt accumulated over years and years of just using credit cards because it seems easier to spend than just putting the cash out.
I got deeply in debt by credit card applications coming in the mail.
$5 here, $3 there, $2 here, $7 there. It doesn't seem like a lot at the moment, but at the end of the month, you know, it adds up $200, $300.
I've had a total of 8 credit cards at one point. No, I'm sorry. Correction. Actually, 11.
The most I've had all at one time is probably maybe 8.
Amoco came at the exact moment that I needed them.
The people at Amoco helped me put our debt into perspective.
Interest is rent paid on money borrowed, you know. And as long as I occupy someone else's money, I'm paying rent on it, you know.
I started paying cash for things because the interest rate is incredible.
Amoco being there and supporting us and helping us come with a plan is probably the main reason why we were able to do what we did.
The Amoco being in our corner, you know, monitoring us, coaching us, you know, guiding us, setting goals for us. It helped us to take that initiative and just move forward.
I still have 2 that I'm paying off, but everything else is closed with the exception of Amoco credit card. That one, I'm not using it unless it's an emergency.
The last time I used the only credit card I have has been over a year ago.
If somebody's struggling with credit card debt, the best advice I could probably give is
control your spending.
It feels really, really good to be out of credit card debt.
And to be more responsible, you know, when making financial decisions.
if you can't afford to pay cash for it or save the money for it, then obviously you don't need it.
I'm an ex-credit card owner.
I am an ex-credit card owner.
I am an ex-credit card owner.
If I can do it, anybody can.
When we come back, what you need to know about loans and who to ask, plus your financial full circle.
Itching to buy a new car? Well, scratch that itch with Amoco Federal Credit Union's Great American Scratch Off. Get qualified for a new vehicle, pre-owned vehicle, or refinance your current loan from another lender. And scratch to save big with Amoco. You could win up to 1% off your qualified interest rate. That means you could get an APR as low as 2.75. 2.75. Log on to AmocoScratchandWin.org and scratch that new car itch with Amoco today.
All right, so what if you really have a need for a loan? I don't want you to get more debt, but sometimes it is necessary and unavoidable. Maybe your car just died and you have no choice but to get it repaired. Or maybe your family has grown and you really need to see if you can buy that house. Okay, if you're going to take out a loan for a new debt and you've determined that it's something that you really must do, I'm going to tell you this. First and foremost, there is no such thing as a free lunch, or more directly, there is no such thing as 0% interest. Now think about it. Why would anyone sell you a house or a car and make no money? No profit. It doesn't make sense, so don't kid yourself. Mortgage lenders and car dealers are gonna get paid. They will realize a profit. You know the saying, if it's too good to be true, then it isn't. So don't let anybody put one over on you. Don't be fooled by lenders offering seemingly unbelievable deals. The fact is, they have built their profit into the transaction somewhere. Otherwise, they wouldn't be in business. So be a smart shopper and know the value of what you're seeking to buy. Do your research, comparison shop. Be a smart borrower. I know you can. Okay, we've talked about your bottom line and your savings. Lenders look at all things in your financial world. Your income, your debt, your assets, your liabilities, and one thing they really like to see is cash savings.
Very good. Excellent.
You want to be in good financial standing and you need to be able to show it. So putting money aside on a regular basis is especially important when you're planning on buying a house. So let's talk about that house. It can cost thousands of dollars just to walk in the door. You have down payments, earnest money, closing costs, escrow and reserve funds, insurance, property taxes, moving expenses, and then there are the extra expenses if you plan on buying a fixer-upper. I know, there's a lot involved and it can be stressful. Okay, just breathe. You're gonna be all right because you're gonna be going in prepared. Now that we've already pointed you in the right direction for saving money, let's focus on some key areas. There are many mortgage loan options available. There are variable rates, adjustable rates, balloon payments, and a wide variety of terms. But generally speaking, a fixed rate mortgage is best. A fixed rate mortgage loan has an interest rate that stays constant over the life of the loan. With a fixed rate, your payments won't change, so you don't have to worry about a loan whose payments may increase as the market conditions change. This feature can provide a borrower with a lot more security than the variable rate products out there. And if you can, choose a shorter term of 20 or 15 years, and you'll save a significant amount of interest over the life of the loan. Okay, my smart home loan shoppers. The next invaluable tip I have for you is this. Get pre-qualified and pre-approved with a lender first. This means you're gonna go shopping for a house already knowing just how much house you can afford. This will make for a lot less stress for what most Americans is one of the biggest purchases of their lives. When going over your loan, make sure you understand any applicable fees and read your good faith estimate and truth in lending statement before the application process begins. Federal law gives you the right to have 24 hours to review and fully understand the terms of your loan. Once your loan is pre-approved, it's time to find that dream home. Arrange for the inspection, negotiate a price, and sign that contract. At the loan closing, it's important that you read all the documents carefully. And there are a lot of documents. I mean a lot. Don't be intimidated. Take your time and ask questions if you have them. The title company officer is there for you, and everyone there is getting a piece of your hard-earned money. So don't feel like you need to be rushed here. Pay close attention. There should be no surprises or any added fees. Hey, let's go see how this Amoco member was helped when they started searching out home loans. Come on. Hello, is this where I can get a home loan?
Yes, hi, I'm Jessie.
Nice to meet you, I'm Dean.
Hi, have a seat.
So tell me about home loans and what kind of home loans you guys have specifically.
We have traditional conventional financing, and that's a fixed rate loan. And with those fixed rate loans, you can pay off early with no penalties, and you can also pay down your principal with no penalties.
Why should someone choose Amoco?
Well, Amoco doesn't charge fees for application, and we also don't have processing fees.
Now, is there anything else that Amoco offers that no one else does?
Part of the interest that you've paid into your loan all year, you get a percentage of that back. Traditionally, it's been 5% of the interest.
Now, what are the first things I really need to know?
What you want to purchase, the price range, let's say. And you're going to need to know approximately how much you want to put down on that home. Being able to put a good down payment down, let's say 20% or more, is going to give you more equity into your home. Also, you're going to need to know the payment range you're comfortable with.
Now, can you give me an example of someone else you might have helped?
Sure. The Cossins, we did an application over the phone for them.
Finding our house was a fun process. I really get into it. I became a member of Amoco when I was 16. My mom worked at Amoco, and I started a checking account then. Been a member ever since, and when we started looking at mortgage loans, we decided to check with them on their rates. Amoco was very knowledgeable about the loans. I mean, they walked us through the process step by step. Any questions that we had, she was there to answer.
There's nothing that we own they didn't finance for us.
Amoco is very convenient. We live in Texas City. They're right down the road. Getting the keys to our house is a great feeling, a sense of accomplishment.
To me, that was the initial way of saying, that's our next step in life.
Amoco will be able to help us achieve those dreams.
Okay, what comes next? How about long-term savings and investing? Talk to your friendly neighborhood credit union about this. They'll point you in the right direction and give you the facts and not some dance around the topic. The folks over at Amoco Federal Credit Union are always available to help. See? Look, they're waiting for you to come by. All right, folks, we've made it all the way around your financial full circle. What does this mean? Well, this is where I sum up all that we've gone through so you can get a full picture of your financial responsibilities. First and foremost, know your situation. This is where you started, remember? Figuring out those assets and liabilities and your overall net worth. Next, establish your long-term goals. You now know how to separate your wants from your needs. Remember, be realistic. Next, create that savings and spending plan. Figure out where all that money is going. Remember when I told you to write things down? Well, do it! And start putting away 10% of your income. And remember, pay yourself first. Now you can start deleting that debt. Get rid of those credit cards. If you can't responsibly use them, then cut them up. Pay down those cards and loans. Negotiate a lower interest rate. Find a way to pay off that debt. Be creative, be aggressive. But don't forget, there is such a thing as good debt when you're ready for it. This is that purchase of a house we talked about, but only when you're ready to go down that road and when your bank account reflects this. And don't forget, always feel free to ask Amoco. These folks are here to help you. They don't just want to, they enjoy it. It's important in this day and age to be aggressive with your finances because, well, they're your finances. And if you're not on top of them, no one will be. Thanks for playing, and we'll see you in the teller line.